Amid a slowing global economy, Korea continues to suffer from a sluggish economic growth. And on Thursday, the Bank of Korea lowered Korea's economic growth forecast for this year to 2.5%, slashing its earlier projection of 2.6% in January. Meanwhile, the trade talks between China and the U.S., which has a great deal of impact on the Korean economy, appears to be entering the last stage of negotiations. For a comprehensive discussion on the diagnosis of Korean economy, Dr. Jun-sok, professor of economics at the Catholic University of Korea, now joins us in the studio. Good to see you again, Dr.
Happy to be here.
So the Bank of Korea cut its Korea's growth forecast for this year to 2.5 from its previous projection of 2.6 in January. What are some of the main reasons behind the downcut?
Okay, well, basically it's sluggish demand. Korea, for the last couple of years, we are having some growth in consumption, but not really high enough to really give a push to the economy. And then the major push from the economy for the last few years have come from exports, but mostly from semiconductors. And this year, the semiconductor exports have fallen greatly. There were some signs last year. Last year, Korean exports grew by 5.5%, but if you exclude semiconductors, it only went up by 0.5%. So without a really strong consumption, and since the beginning of this year, fall in exports, that also means that there's lackluster investment as well. For the last 5 years or so, investment was not really a leading variable. It actually follows consumption and exports. So the latest Bank of Korea report, they said that investment fell from 2% to 0.4%. And then the general lack of demand can be seen from very low inflation rate. Right now, the inflation for the year is expected to be 1.1%, but it may even fall lower than that, according to the BOK report. And that just signals, well, it's partially because the oil prices have not been going up as quickly, but still, it does signal that there's a very weak demand, and without a strong demand, the economy is not likely to get stronger.
Now, the Bank of Korea has also kept its key interest rate steady at 1.75. How do you evaluate that decision? Okay,
well, for the last 2 years or so, the Bank of Korea has been in a really difficult position between a rock and a hard place. The U.S. has started to raise its interest rates, but Korea was not really strong enough to raise its interest rates. So right now we're in an interest rate reversal where the United States has 0.5 to 0.75 percentage point higher interest than Korea. Obviously, because Korea is a weaker country than the United States, whenever Korea has a lower interest rate, there's always some danger that there will be a rapid capital outflow. And because Korea has experienced a currency crisis, we don't really want to make the differential larger. And previously, we've gone as large as 1.0%. So I think the Bank of Korea is looking at that as sort of a marginal line. We don't want the difference to get larger than that. And right now, it's about 0.75%, as I mentioned earlier. So I think they figure that perhaps we have one more bullet to shoot, and they don't want to waste it. And previously, when Bank of Korea was lowering interest rates, the last 3 or 4 drop in interest rate really didn't do much to help the economy. So I think they're looking at using the fiscal policy first, and if they think that they can be very effective, then they'll use that last bullet. But I don't think they consider this stage for lowering the interest rate yet. And again, the problem also is that if they do decide to lower the interest rate, that may increase the household debt, which is a major problem. It may also create some bubbles in the housing market, which has been a large political problem. So I think the BOK is basically saying, let's see how it goes, let's see how the fiscal policy works, and if necessary, we'll use that one bullet perhaps later when it can be more effective.
Now, BOK Governor Lee Ju-yeol recently brought up the issue of redenomination at the National Assembly, once again sparking national debate on the need for Korea's currency reform. What's your take on the issue?
Okay, well, theoretically, the reason you do a currency reform is you want to do a monetary reform as well. Usually, when you see a currency reform of this sort, redenomination, it's usually as part of the package to cut inflation. whenever you have a country which has a very large inflation because they've issued too much money, then they want to cut the money supply as quickly as possible. So what they do is they issue new money to replace the old money, so a lot of the old money that's out there becomes ineffective, and they could only withdraw it very slowly. And as part of that, because you have high inflation, which made the unit rise, they cut some of the zeros as well. Now, Korea doesn't really have a very high inflation rate. Korea really doesn't have a problem with its monetary policy issuing too much money. So basically, this will only be cosmetic. Do we drop off 1 zero or 2 zeros from Korean currency? And at least theoretically, it should not have any effect on the economy. Now, there's some argument that there will be a psychological effect. Korean unit is right now about 1,200 won to $1 US. That makes the Korean won seem too small. And if this changes to, say, 120 won per dollar or 12 won per dollar, then maybe it'll make the Korean won more solid currency, but those are all psychological effects. It doesn't really have much to do with economics per se. So I don't think it's going to be a priority item.
Now, we are still waiting for the U.S. Treasury's currency report. This semi-annual report is normally released around April 15th, but now it's been delayed, grabbing attention from market watchers all across the globe. Now, what are some possible reasons for the delay, and how do you expect the report to evaluate Korea's currency practices?
Okay, I think some of the reasons why the report is being delayed is because, well, United States is picking fights with everybody. It's picking fights with China, it's picking fights with Japan, it's picking fights with European Union, and currency manipulation is going to be a major issue there. They want the United States more transparency, and then they want some kind of a mechanism so that the foreign currency against the United States will not be too weak, will not be used to increase exports. And I think they're using this as sort of a tool, perhaps a leverage for the negotiations. United States has announced intentions to start negotiating with the European Union and Japan. They're finishing up the negotiations with China. So perhaps they think President Trump is likely to think this way. If they keep some of the cards in their pocket without showing it, they may have more leverage during negotiations. Now, as far as Korea is concerned, the U.S. Treasury usually has 3 criteria to determine whether a country is a currency manipulator or not. First is that that country has a bilateral trade surplus with the United States over $20 billion. Korea, until last year, fulfilled that criteria, but until 2017, fulfilled that criteria, but in 2018, it dropped below that amount. So we no longer fulfill that criteria. And then second criteria is the current account has to be greater than 3% of the GDP. Korea still fulfills that criteria. Korean current account last year was about 4.3% of the GDP. And then the last criteria is that there's no currency intervention over 2% of GDP. Now, that variable Korea has always not kept it secret per se, but it didn't really reveal it. But last year they started revealing a related variable, which is on net, how much Korea intervened in the currency market, and that amount was only about $0.19 billion, and that's way less than 2% of the GDP. In fact, it's way less than 0.1% of the GDP. So we don't think we're going to be caught with we're going to be caught with only 1 out of the 3 criteria, but we're probably going to still be maintained on the monitoring list. You'll get on the monitoring list if you get 2 out of 3 criteria. Korea only fulfills 1 out of 3 criteria, but we have to fulfill 1 out of 3 criteria for at least 2 reports. That's 1 year. So we perhaps will get out of. We only fulfill 1 out of the 3 criteria this report, and next report. And then after, if we keep only fulfilling only one of the three criteria, then we'll probably get out next year. But this year, they'll probably keep us on the monitoring list.
Well, it sounds like a quite complicated evaluation with quite a number of criterias. Now, it appears the U.S. and China are entering the last phase of their trade talks, with some reports suggesting that they will declare an end to the trade war as early as May. Do you think that would be likely? Well,
President Trump is tweeting that there will be some kind of an agreement at the end of May. The interesting thing, though, is that people on the working level, the USTR offices, the Treasury offices, they are saying that there will probably be some kind of an agreement soon, but they're trying to control expectations. Right now, the popular opinion, which I share, seems to be that there will be some kind of sort of a ceasefire. But skirmishes will continue down the line. And there's some major issues which have not been solved yet. Both reports from the Chinese side and the U.S. side on the working level say that they've solved a lot of issues, but there's some major issues which still remain. How much industrial policy will China be able to still use? And I think the big issue is going to be the United States really wants to monitor the progress on whatever promises China makes on the agreement, but the Chinese public themselves may not accept United States having that veto right over what China's policy is going to be. They may not accept the fact that perhaps United States will have an approval over Chinese industrial policy and penalize China if it feels that China has reneged on the agreement. Convincing the Chinese public that this is in Chinese interest, I think it's going to be a very hard task, and I think that's delaying the final negotiations somewhat. They have to work out some kind of compromise which looks good to the Chinese public.
So quite a number of sticking points that still need to be ironed out. Now, U.S. President Trump seems to be expanding his map of trade protectionism from China to EU and even to Japan. Recently, Washington has warned of high tariffs on EU imports, and the EU has decided to slap tariffs on U.S. imports in retaliation. Now, how would Trump's persisting trade protectionism affect Korea along with other countries across the globe?
Okay, well, Bloomberg did an interesting calculation. They took a look at not only the U.S.-China trade war, but also U.S.-EU trade war, perhaps even the problems with Japan as well. And in addition, the EU slowdown as well as the problem they have with Brexit. And they calculated all these international instabilities, how it would affect each country in the globe. And they looked at not necessarily how much the GDP will fall, but how much GDP is vulnerable. So this is sort of the maximum effect that it could have. And globally, about 2.3% of the GDP can be affected by these international trade instabilities. For the largest problem will occur in United Kingdom and Ireland because of Brexit. But for Germany, China, and Mexico, it was about 4% range. About 4% of their GDP may be affected. For Korea, the number came out to about 2.9. It's not that bad, but still, it is a major chunk of the economy. The largest component was if there's a problem with automobiles. If President Trump puts tariffs on automobiles, that would hit Korea very badly. United States, only about 1.5% of their GDP will be affected, which may be why President Trump is pushing the issue so hard because, well, there's less possible penalties for the United States. Having said that, though, I think we need to put this problem in perspective. We mentioned EU and United States trade war earlier. The United States is threatening to put $11.2 billion worth of European imports for tariffs because of the Airbus subsidies. The EU has threatened to put tariffs on $20 billion worth of American imports for subsidies to Boeing. But even though it seems like a large number, that's about 3.5% of U.S. exports to European Union and about 4.5% of European Union's exports to the United States. So it's a large number, but as a proportion of trade, it's not as big as some people fear. So there will be some damage, but at least for now, it'll be limited. But knowing President Trump, we don't know how he'll expand that. Also, the type of issues that he's going to talk about, agriculture, automobiles, steel, digital trade, free flow of information, those are right now President Trump has an interest in, as well as the U.S. Congress and the USTR. And I think those issues are going to be more important than the value itself, especially for Korea, because, well, after they work out what they're going to do with the EU and United States on these issues, and with China and with Japan, they'll probably push these issues on Korea as well. So I think it's not necessarily the amount that's important, but what type of issues they're going to talk about, what kind of issues they're going to come to agreement with.
Well, Dr. Yang, thank you as always for your comprehensive yet easy to follow answers. Thank you.
Thank you.